Right, tankers, bit of a late night update from me, and apologies because Joel and I have not been able to record last week or this week, so I'm just going to do a quick update and we'll be back next week with an exciting interview, hopefully another Sporting Globe themed one. But one thing I wanted to chat with you about today is PSTH. So in the last couple of updates and a few of the pods, I've discussed this SPAC, Special Purpose Acquisition Company, and I was pretty excited about a deal that was announced with UMG. However, if anyone's been following this news, this deal has fallen through, basically because of the American Securities Exchange Commission, the SEC, has decided that there were elements of this deal that they didn't like. And I've got a bit of a clip here from CNBC when they interviewed Bill Ackman, and he discusses why.
Bill, it's great to see you this morning, to be able to talk to you on a morning when this headline emerged and this deal has effectively been called off. I do know that your hedge fund will now step into the place effectively of the SPAC, but tell us what happened.
Sure. So just to rewind, if we go back just a few weeks, we announced the transaction, and a couple of weeks later, before we signed the deal, the SEC came to us and said, we have some concern about whether RemainCo, this entity we were creating, was going to become an investment company. In order to address the SEC's concern, we changed the structure of the deal to provide that we were going to contribute the stock that we purchased to a trust. And we thought that would address the issue. And then we signed the deal, and then we pushed forward with the transaction. And then actually in this last few days, the SEC raised, I would say, a deal killer, which is they said that in their view, the transaction did not meet the New York Stock Exchange SPAC rules. And what that meant, I would call that a dagger in the heart of the transaction, put Tontine in a very awkward spot. And we love Universal. We were excited to bring this deal to the Pershing Square Tontine shareholders. Not being able to do the transaction, we offered to take it off the hands of the public company that was actually built into the transaction, the right to assign to an affiliate. And we've also assumed an indemnity obligation, some expenses, so that we put Tontine kind of back in the place where it was as if we hadn't done the deal. And now we have 18 months to find another transaction, and that one's going to be a merger. This one, we structured the way we did really to accommodate the ability to acquire Universal, because we were so excited about the business and we wanted to be owned by our shareholders. SEC didn't like it, and therefore we're going to do a more conventional merger. But our intent was to do a merger all along. It was really Vivendi's, some issues on their side that caused us to structure the deal this way.
So yeah, there's a few things there, and they also said a bit later on in the interview that part of it was there was some sentiment or some feeling from what Bill Ackman has called the Reddit traders. So he also discussed a few things. I'll show you the clip.
Bill, was this just too complicated? I think a lot of us, including myself, struggled to be able to articulate and explain to the public what exactly this was. It was very different in many ways than a traditional SPAC. Clearly, the investors also felt perhaps that this was too complex because they started selling effectively the shares and they fell in price.
Sure. So what happened was, I think, we really have two kinds of investors. When we went public, we got to select all the investors, and we picked investors who had a very long-term orientation. They wanted to, they were kind of going to be partners with us in buying a business we own for the next, multiple years. In our case, probably a decade or more. And then I would say the Reddit community got excited about Tontine, and a lot of shorter-term investors came in and said, look, I want to bet on a deal being announced, the day one pop. A lot of those investors were levered. A lot of those investors bought options. And we announced a deal that, unfortunately, is very bad if you're levered or if you own options, because when the requirement to put the stock in a trust account is very detrimental if you're a margin holder. It's also very detrimental if you're an option holder. So we probably had none of those investors came into the IPO, but by the time of announcement, about a third of our stock, I think, was held by people hoping, that we're going to announce a transaction where the stock doubles, if you will, the first day. There are a lot of investors that have been investing in SPACs that way, and I have no issue with a short-term investor, and we didn't design the transaction to affect short-term investors, but we were really focused on creating kind of long-term value. What's interesting is all of these problems go away by the end of the year. The issues that people were concerned about is, one, my stock that you buy and I'm not going to get for 4 months. It's going to sit in a trust account. We didn't like that, but that was really something we had to do for regulatory reasons.
Bill,
another issue, Universal. Just stick with it for 1 second. But Universal is going to be a Dutch-listed company. People didn't love that, but we believed, by the time that we distributed the stock to shareholders, it would likely be, hopefully, be a New York Stock Exchange-listed company. So each of these problems, if you could hold the stock for 6 months, I think people would do very, very well. But unfortunately, I would say a meaningful percentage of our investors needed to hold it for a much shorter period of time, and it had a negative impact on them, and that I think has driven the stock down.
Now, I guess, where does this leave us, and is PSTH still a good investment? So it's back to the original proposition. Tontine warrants, the warrant structure, which I've discussed in previous videos, and at the moment, target's unknown. However, I guess the advantage is that PSH and Bill Ackman have had a while to start canvassing the targets they've already visited and re-establish those connections. What am I planning to do? I'm planning to hold my position. I might average down a bit, and I might sell some covered calls, try and recoup some money that way. But yeah, overall, there's not really much you can do at the moment. I still think it represents a good upside risk-reward structure for an investor. However, the opportunity cost of holding, if you held since the inception of the spark until now, you've already lost time in the market, and now it's trading close to NAV. So if you bought any higher, you would have lost some money there. So yeah, it's something to keep in mind. But anyway, another brief update from me, and I might come back with another one this week. Thanks, tankers.